Oil spikes, reverse carry trade unwinds. Bank of Japan has to raise interest rates because of the inflation from the energy costs in their economy. Everybody rushes to repay those loans to the Bank of Japan to dump US treasuries and rotate into Japanese bonds because those are going to pay a higher interest rate at that point than the US treasuries. All of those US treasuries come flooding back to the US. Luckily, we have stablecoin regulation here and there's demand domestically for those treasuries, so that stabilizes the bond market. Unfortunately, that doesn't stabilize the rest of the markets. We have huge downside in other markets globally, across the board, commodities. Doesn't matter where you have money, it's going to take a haircut. We already have huge unrealized losses for the investment banks. You're also going to have huge unrealized losses on Bitcoin because of the ETFs. The ETFs absolutely have systemic risk at this point. And then aside from that, I think Tether is going to have some implications. I don't know if they get sanctioned or if they are depegged because of their allocations in gold and Bitcoin and some of this other private debt that they have on their balance sheet. That causes exchanges to go illiquid, and you're going to have the Shane Ellis theory play out. So they're going to need XRP to drive, liquidity in their ecosystems to be able to settle through the DEX and everything that allows. Shane Ellis, if you want to go look it up, he talks about a $500 XRP just from Bitfinex adopting XRP as their settlement asset or the liquidity provision instead of Tether. And then you're also going to have demand on the back end of the stock market for real-time settlement to be able to de-risk from those positions in Bitcoin, because Bitcoin settles real-time-ish, faster than T+1, which is what currently the market settles at. That's what the president of NASDAQ and the SEC chair and everybody else have already talked about.